In the currency quadrant, taking a look at the June euro currency future, which looked like it was resuming its uptrend with back-to-back sessions of higher prices. But after the Trump administration announced the 90-day pause on reciprocal tariffs for most countries, specifically the countries that did not respond with their own set of reciprocal tariffs, the euro turned lower and is coming into the end of the future session negative on the day. The high today was 111 even, which was up 1.33% from yesterday's close. The low, on the other hand, so far was 109.57 half, which was down about 1/3%. At the end of the New York cash session, we were still up 0.15%, but with a little bit of time left before the futures close, the euro is down about 0.2%. Tariff uncertainty is obviously the main driver for all futures markets over the last couple of days, and Europe is not exempt from that. So people believe the European Union could benefit from the aggressive tariff policy being implemented by the US, and that countries like China and India will turn to the EU to satisfy some of the benefits they're now getting from the US. But the 90-day pause implemented by the Trump administration pulls that perceived advantage back from the euro currency, hence the late day drop that we saw in the currency. We also saw the dollar rally in the aggregate by about 0.1%. And we saw a shift in U.S. interest rates from yields having been up on the back end quite a bit more than they were on the front end in terms of change on the day. The opposite is now true. As we come into the close, yields are much higher on the front end than on the back end in terms of the change on the day. And this reflects opinions on yield differentials and the speed in which the divergence between European yields and U.S. yields have been shifting. The story has gone from higher long-end yields implying stagflation to higher front-end yields implying short-term economic stability in the U.S. And that last part, a little bit bearish short-term for the euro.